Welcome to Yahoo Finance's flagship show, Morning Brief. I'm Julie Hyman. Let's get to the three things you need to know today. First up, the Senate has passed a bill to end the government shutdown. The legislation now heads to the House floor for passage. If it passes the House, which it's expected to do, the legislation will head to President Trump to be signed into law. Meanwhile, flight cancellations are piling up amid air traffic controller shortages. Plus, CoreWeave is sliding after lowering its annual revenue forecast. The cloud computing provider said a data center delay would affect fourth quarter expectations. That has prompted JP Morgan to downgrade the stock. Analysts note that the supply constraints are short-term but highlight execution risks. And Softbank has sold its entire stake in Nvidia. The conglomerate's earnings results showed it sold 32.1 million Nvidia shares in October. Softbank executives did say the sale had nothing to do with Nvidia itself, but was a necessary financing measure. The company's CFO said the sale allows the firm to offer investment opportunities for its shareholders and help it maintain financial strength. Let's get a check-in on stock futures. We got a mixed picture this morning. The Dow very slightly higher here, but the NASDAQ and the S&P 500 are pointing to declines at the open, modest ones, but still a little bit of an arrestment of momentum here. Let's dig into our top stories of the day now. Futures little changed after an AI-fueled rally to kick off the week, and a bill to end the government shutdown now heads to the House after passing the Senate, plus SoftBank selling its stake in Nvidia. Joining me now, senior reporter Brooke DePalma live at the NASDAQ, Washington correspondent Ben Worschel, and Chris Versace, Tematica Research Chief Investment Officer. Ben, let's start with you. What is the latest on the shutdown and what happens now?
Yeah. Morning, Julie. So the path to ending the shutdown is kind of becoming clearer by the hour after the Senate vote last night. This was a 60-40 vote to finalize the bill, the deal in the Senate, and send it to the House of Representatives, as you mentioned. Also this morning, we're getting more sense from the House on the timing on their side. They're going to begin what they're describing as a series of votes starting at 4 p.m. Eastern tomorrow time. So in about a day's time. To pass this. This bill is widely expected to pass. It's expected to have enough votes, but it will be a close vote. A lot of the drama, interestingly, for the next few hours is travel related. Lawmakers are scattered around the country. The House hasn't been in session for about 53 days. They have to get back to Washington and they have to contend with shutdown flight delays in order to end the shutdown. So it's a bit of a snaking in its tail there to kind of get back to Washington. Either way, at the end of the day, they're going to likely pass this and send it to President Trump, who has signaled he's going to sign it. What it'll mean for the bottom line for the markets and for the economy is that by the end of this week, Thursday or Friday is what's expected. The government will reopen and federal workers will be kind of get their back pay, be back at full strength, and start to reverse a lot of this economic damage from the flight delays to the lack of government data to all the other things we've been talking about for weeks now.
Yes, we have been. Chris, I want to ask you about this because the government shutdown didn't seem to hurt the markets, but the news yesterday that it was probably coming to an end seemed to help the markets. What gives?
I think what you saw, Julie, was just the removal of one overhang that's been, the market has been contending with. And you're right, when we look at a lot of the economic data, even the spending data that we did get, I think there was a lot of surprise to the upside given the shutdown. But now we know that it's, poised to end. I would say that there are other hurdles out there. Earnings growth, for example, how many rate cuts is the Fed likely to deliver between not only now and the end of the year, but the first half of 2026. But I also think we have to kind of step back and say that, this deal is just another kick the can, given that only some of the programs will be funded through September 30th, others January 30th. It tells me that just as we see, the December quarter earnings season really kick off in January, we could be talking about this all over again.
Well, lucky us. That'll be fun to do again in January, especially for Ben. Let's talk about the other big driving force behind the market then, and that, of course, is AI. And a couple of pieces of news this morning that are pushing that around, and that's that SoftBank news that it had sold its Nvidia stake and those CoreWeave numbers, Brooke.
Yeah, two significant headlines really testing this AI momentum that we're getting overnight. Softbank selling its stake in Nvidia for $5.80 billion. Now, it's worth noting, as you mentioned at the top, but the Softbank said this has nothing to do with necessarily Nvidia itself. It's more of a financing measure. CFO saying that this provides investment opportunities for its shareholders and also helps it maintain that financial strength. It's worth noting that Softbank has that significant investment with OpenAI, and also this is not the first time that Softbank has sold off its stakes within Nvidia. It did it back in 2019 before the company returned to small stakes within Nvidia in 2020 and just saw that tremendous growth for the stock since then. Also worth noting this Nvidia-backed CoreWeave results. I mean, overnight, that stock now seeing some downward momentum, down more than 8% in this pre-market trading after the company cut its annual sales forecast, which seemed to have disappointed the street this morning. It now expects 2025 annual sales to come in the range of $5.05 billion to $5.15 billion, and that was down from a prior outlook of about $5.15 billion to $5.35 billion. And the CEO had said on the call that this was due to affected by a temporary delay related to a third-party data center developer who is behind schedule. And that seems to what happened to have disappointed the street overnight. And so two key things happening this morning that's really giving some test to that AI momentum that we saw yesterday.
Yeah, and speaking of that AI momentum that has sort of gone back and forth, Brooke, what are you seeing in terms of commentary around the recent action that we've been seeing?
Yeah, well, think about this. Yesterday, the S&P 500 saw one of its largest gains in the last month. It was up about 1.5% at the close. And also, too, you had Nvidia, you had Palantir, you had other names like Western Digital, Seagate Technologies. They were all up about 5% on Monday during the trading session. And that really got the street excited. Like I said, largest gain that we saw for the S&P 500 in over a month. But now UBS out with some key factors here that really need to keep this equity market rally going. The UBS strategist saying that, like similar to what Chris had said, the Federal Reserve easing policy here, also robust corporate earnings and strong AI spending have really been the key market drivers here. Those three factors need to keep going in order to see this momentum continue into year end.
Brooke, Ben, thank you very much. I want to dig into this a little bit more with Chris here, this whole AI theme, because Chris, I know it's one that you, like many of us, watch really, really closely. And I'm curious what you make of this sort of stop-start that we've had, and in particular, your reaction to those two stories that we've been watching this morning, the SoftBank, Nvidia, and the CoreWeave story.
So on the CoreWeave side, Julie, when you look at some other companies that are out there, whether it's, Arista Networks or some of the others that, we've seen that there have been capacity crunches, the ability, really with power to bring that incremental capacity on stream. It's a bottleneck, but it's also one of the reasons why I think the investment community is, bullish on companies like Eaton, for example, which we own in the Street Pro portfolio, because of the tapped out electrical grid and the need to add incremental capacity. So I think this is just going to be another regular, like I hate to use the word bottleneck. And as more capacity comes on stream, I think we can look forward to a reacceleration in growth. And if you think about it, this is really the story that we heard earlier this year from Microsoft when they were capacity constrained, bringing on incremental cloud capacity. We heard it from Meta. We heard it from Google, and now we're starting to hear it really on the other side. And pain points, in my opinion, are simply a wonderful, wonderful area to take advantage of as an investor. And I think this is really what we're seeing.
Pain points, is that another way of saying buy the dip, Chris?
I didn't say buy the dip, but I will say that we did take advantage in the Pro portfolio yesterday to wade into, several different names. And yes, Palantir was among them.
Oh, interesting. Chris, something else about CoreWeave that sort of differentiates it, not necessarily as positively from some other companies in the space is, I've talked to some investors who have said, maybe not the canary in the coal mine, but something you want to keep an eye on are the debt levels. What are the various ways that these companies are raising money in order to invest back in this huge data center theme? And CoreWeave does have a higher debt profile than some of the other companies out there. Is that something that concerns you? What would concern you about it? What do we need to watch there?
So I think that there's a couple concerns there. One, yes, the debt level. We have to watch not only the actual debt level, but its ability to service it.
Right.
So of course we want to pay attention to some of those other metrics that are out there, EBITDA to interest, for example, and we can kind of help balance that concern depending on what those metrics are. There's also what folks are calling, the money shell game, if you will, or the money shuffle between different companies. And, no question we have to watch it. But I think when we step back, Julie, and we think about where we are with AI adoption, and there's a great report out from McKinsey, that's scanning a variety of enterprises. And what it shows is that, yes, a lot of companies, around 88%, have at least one use case for AI, but only about a third of them are really starting to scale. That tells me that we're still not, early days, first, second inning. I think we're more third, fourth inning. And, as I've shared with folks at the Street Pro portfolio, and even when I've been on with you guys in the past, to me, the thing to watch is the rate of AI adoption. Once it starts to slow, that's when I think we have to, start really thinking about, are we risking excess capacity coming on stream relative to incremental demand? Do I think we're there yet? Not yet.
Right, and there's also some of the studies that have shown that even if there is some experimentation and implementation, it's not yet making those companies money, in any kind of material size or saving them money. In some cases it is, but on the aggregate, it doesn't look like we're yet there. So that's something to watch too. When it comes to Nvidia and the Softbank change, now Softbank says we're just raising money, and incidentally, some of the money they're raising is going back into OpenAI, which of course, has relationships with Nvidia and all these other companies. But what do you make of that news, and what should investors be doing with Nvidia right now?
So when we take a look at like the multi-year backlog, CoreWeave, for example, when you look at the 12.5 million or so Wall Street expects it to, deliver in revenue next year, it's 3.5 times that revenue is where the backlog was exiting the most recent quarter. And remember too, Julie, that's a timestamp of September 30th. And you think about the other deals that we've heard between OpenAI and Microsoft, or OpenAI and Amazon, it tells us those backlog numbers are going to go higher. So I think the visibility is very good. I think we need to continue to triangulate, around other data points, just to make sure that, yes, that ramp is proceeding as expected. That's why we'll be paying attention to what utilities have to say in terms of their electricity capital spending. What are we seeing from Taiwan Semiconductor, other chip companies, so we can kind of follow along and make sure it's tracking. But to your point, what to do with Nvidia here, I do think that the Softbank news is going to, alarm some people. Why pull the whole thing off? We do understand that, much like we do, they have to manage their portfolio, but there's going to be a little shock and awe. I think that's, depending on the size of the sell-off, that could be an opportunity for folks that are underweight Nvidia to wade in, just like I said with Palantir last.
Interesting. And then Nvidia earnings are still coming up, right, on November 19th. So I'm curious what type of catalyst you think that's going to be, given that we haven't always seen, even when some of the big tech earnings have been positive on the face of it, the shares have not gone up.
Yeah, so my comment, for the September quarter earnings season, and we'll extend it a little bit to allow for Nvidia, is that just given where the stocks had been going into the earnings season, they were really going to have to deliver a beat and raise quarter. And in the case of Nvidia, it can't just raise a little bit, right? There's a lot of expectation around that. So they really need to come in and, knock the cover off the ball. And it appears like they're going to do that. Remember, their quarter end is October. So a lot of these other deals that we heard announced in the last several weeks should be kind of baked into their backlog. So I think we're going to see some good numbers.
All right, we shall see. And Chris, you're going to stick around. We're going to talk a little bit more broadly about earnings coming up in just a few. Coming up on Morning Brief, we're also going to bring you today's top trending tickers and count you down to the opening bell. We'll be right back. Now, time for some of today's trending tickers. We are watching Nebius, C, and Big Bear AI. First up is Nebius. The cloud computing provider saw third quarter sales soar by more than 300%. The company forecast it will reach an annualized run rate of revenue of $7 billion to $9 billion by the end of 2026. It also announced it signed a 5-year agreement with Meta for about $3 billion of capacity, marking its second largest AI infrastructure deal. Those shares up about 1.5%. Next up is C. Singapore's e-commerce giant missed quarterly profit estimates amid a growing price war. The company boosted spending to battle competitors, including ByteDance and Alibaba. Shares of C have more than quadrupled from 2024 lows as its earnings performance has improved, but they've lost more than 20% in the past 2 months over concerns that the valuation has now become too high given that increasing competition. And finally, Big Bear AI, the company's third quarter results topping Wall Street estimates. It also said it would buy the generative AI platform Ask Sage, which is expected to deliver annual recurring revenues of about $25 million this year. Big Bear AI is a technology company that provides AI-powered decision intelligence solutions for national security, critical infrastructure, and commercial sectors. Those shares soaring 20%. As always, you can scan the QR code below to track the best and worst performing stocks with Yahoo Finance's trending tickers page. Well, U.S. corporate buybacks providing a tailwind to the stock market to the tune of roughly $1.2 trillion so far this year. That is 15% ahead of this time last year. And back with us is Chris Versace, Tematica Research Chief Investment Officer. Chris, I find it fascinating that we have seen this big uptick in buyback authorizations and buybacks themselves, given that stocks are near their highs. What is that telling us?
I think to some extent, Julie, it reflects the nervousness that we saw in the market earlier in this year. I think the buyback programs, they surpassed the 1 trillion level back in August. And, if you were to look back, a lot of volatility in the market, even though the overall market has moved higher, it's really been tied to something you and I talked about earlier, the AI trade. If we look across, the wider S&P 500, there's a number of companies out there that from a technical perspective are below their 200-day moving average. And I think that's really where we're seeing the uplift in a lot of these programs because their shares are undervalued.
And it is at a time when it seems like there is an uptick in confidence among CEOs potentially as well. I saw another story this morning that talked about the mentions of quote unquote economic slowdown on conference calls is down quite a bit. Bloomberg was tracking those mentions. And so I guess if you put the buyback together with that, corporate America, it seems, is feeling relatively confident.
Yeah, I think that's right. When we take a look at the most recent service PMI numbers, remember, a lot of folks take a look at manufacturing and services because the services side of the economy is about 85-90% of GDP. I think that deserves the greater focus. And what we saw was a rebound in new orders, a pickup in activity. And I think that, folks are feeling a little bit better about it, at least on the corporate side. On the consumer side, obviously, we still see a bifurcated consumer. But to your point, I think that companies are feeling better. They have cash flow, but depending on where they are, they might see their stock undervalued, hence the use of the buyback program. Which I like, but I also like to see that balance with dividends for what it's worth. Okay,
good to know. And you mentioned the consumer. Obviously, that's the other big part of the equation right now and what we're watching very closely. And the consumer, particularly the lower end consumer, doesn't seem to be holding up that well. Do you think that you avoid those areas of the market right now that are sort of leveraged to that consumer?
I think by and large, you want to do that. Look, you always want to go where the capital or where the money is being spent. And I think that helps explain why folks have been really keyed in on the AI trade. There's also, the level of earnings growth that it's expected to deliver next year. When we look at the info tech sector, we look at the weighting in the market, it all kind of goes hand in hand. But you do want to avoid potential pitfalls. Or, as I talked about in the earlier segment, capitalize on potential pain points. So from my perspective, when we see a cash-strapped consumer, we're looking for folks that are looking to stretch their disposable spending dollars. Where are they going to go to do that? Yeah, you have your Walmarts, your Costco's, but you also have the holiday shopping season. To me, that really sets up nicely for a company like TJX or maybe even Ross Stores.
Well, and that also comes back to what I was going to ask you as well, which is outside of AI, where are you looking? So you just mentioned a couple of examples. And I would say not just outside of AI, but outside of that AI universe. Like you said, you're looking at Eaton, which obviously is not an AI company, it's an industrial company, but it's servicing that AI trade. Is there stuff that's just like not AI at all, aside from like TJX, et cetera, that is attractive right now?
Yeah, no, I think that's right. You know, we look, I think that ultimately AI is going to be a lot like the internet, and it's going to cut across a wide array of industries. And when we look at, you know, that adoption level, whether it's in accounting firms, law firms, we're looking at personal and body care companies that are looking at, we look at Axon, Motorola solutions, right? We know that AI is coming into productivity plays there for public safety. So I think it's going to be a very pervasive technology, but there are areas where it'll have less of an impact. And I think, you know, companies like TJX, Ross Stores, some of those are the areas. Areas outside of those that we're kind of looking at, you know, even though AI is a bit of a play, we do like the public safety sector, like I had mentioned. So there are areas out there. I think the key, Julie, is going to focus in on where's the money being spent and what companies are poised to deliver faster earnings growth than the S&P 500, which, by the way, the market expects it to deliver something north of 13% next year. That's a big number.
Yes, it is a big number. Chris, great to see you as always. Thank you.
Thank you.
Coming up on Yahoo Finance, opening bid with our executive editor, Brian Sozzi. He's here right now. Soz, what do you got going on today?
Hey, Julie, we're going to dig into all things government shutdown, what investors should be thinking about after this eventually ends, and it will end. Of course, we're going to stay on the AI stock theme and also dive into one of the stocks of the CEOs that are coming to invest. That's a deep tease, Julie, as they call it in this business. I'm not going to tell you who it is, though.
Well, people will have to watch then. They have no choice.
Yep.
All right, thanks, Soz. Appreciate it. That does it for Morning Brief. Brian Sozzi and Opening Bid are next.